Okay, guys, welcome. Going to talk a little bit today. G'day, Ron. Second time today already? What's going on? Starting to scare me a little bit. I'm going to talk about something a little bit different today, guys. Spoke a little bit in the webinars I did back in September, October period. And it's the all-important part of trade management that gets forgotten about, and that is the old where to get out of something. I was talking about this in my Asia class today at boot camp, and I was also, I harp on about this too much, but I think this is really important. To be a good trader, you need to be a good analyst. And then once you're a good analyst, you become a great trade planner. And then after that, you've got to be good at executing that trade plan and then managing it. Okay? And it's sort of this area, and this area that I'll be touching on. Okay? I cannot overemphasize how good it is to be good at analysis before you're doing trade plans. And if you're not good at analysis, you shouldn't even be making a trade plan. Okay? And once you're good at analysis, trade plans become sort of second nature, and then after that, so does the management. Now, when we talk trade plans, what are the three things, and maybe a non-bootcamp person can try and answer this, but what are the three things probably essential that should go into a trade plan? And if you do not have these three things, there is no trade. Anyone got any ideas? We need an entry. Yes. We need a target. Thank you, David L. Sort of said non-bootcamp people, but no problem. And we need to know our risk, right? We need to know whether it's worth it. Good. Now, this one here, number 2, I can guarantee you most of the people in this webinar forget about all the time. They just see entry, and they actually forget target. And quite often, put your hands up. I'll put my hand up. Quite often, you'll be trading along and go, another break even, loss, another break even. Oh, great, 25 pip loss for the day. Man, looking back on those trades, if I'd taken profit at all those highs, I probably would have made 100 pips. I was up 40 pips, took a break even. I was up 50 pips, took a break even. Took a loss. I was up 30 pips, took a break even. Then the next day you turn up again and the first trade's a loss. And so what's happening, you're finding, is your trading account in the long run is probably doing something like this. It might even be up, but slightly up, or it could almost be down. Okay? And so what does a trader do who's slightly down in their profit? Their trading account's slowly going downwards, slowly, not rocketing, not hemorrhaging, or is completely sideways, like, maybe at the end of the month, you're exactly the same level you started the month at, constantly, or you're making pips, but it's like, small pips, very small gains. What do you guys generally work on to try and improve that? It's very often not this area, is it? And I'll get that in class. I'll get it in my classes at boot camp a lot. Is I've got to refine my entries. I've got to do this with my entries. I've got to do this with my entries. And I'm a little bit like, not really. Most of you have been around trading for a little bit. probably should look at where you're going and try and work out the smarter places to take profit and actually bank some of this money. Actually get out of the trade, take the money, and then line up the next one. Okay, so that's what we're going to talk about, is more the target, the part that gets largely left behind versus where we're entering and all that sort of deal. Okay, I've found, since I've focused a lot more on my targets, guys, I'm a much happy camper. Let's put it that way. So, tell me, guys, when you trade, do you look for a specific amount of pips per trade? Give me some ideas, you guys in the room, how you do your planning, or what's your expectation? If you took a trade right now, I don't know, let's take a look at the euro right now. If you took a trade right now on this euro dollar right here, what would be your expectation out of this trade? I used to go for the home run all the time. G'day, Bruce. Why would you say 0, Mike? If you shorted this at resistance, to me, this is the resistance area. Okay, and the greater trend. What would be your expectation? Where would your target be on this pair right here? 132.92. We are currently here, and there's 131 pips down to a lower low. Why can't it make it? Why can't we just, 15-minute move, fib, 4-hour swing? That would fulfill a 4-hour change of trend, so why not a short-term change of trend here at this resistance area and come and make a new lower low and say hello to 132 today? Continue that general flow. Why couldn't that happen? The bulls are looking at the fib rise. What about the bears that sold at the nice 4-hour resistance line here? So if that's 4-hour resistance, that's i.e. almost like a daily swing. Of course, we've come down here and found some support, right? Why have we found support? Fib of the rise. But now we're back at a fib zone of the short side, so question, could it go there? To 132. Right. So, if you sold right here, would 132 be a good target? Fresh lower lows? Yes, absolutely. I would short it. If it changes trend here, I would take a shot. On a short-term time frame in here at resistance on this fib, why not? 50% fib of the rise. Okay? Now, just above the, like if you took a very short-term trade, just above the higher high here. Do you mean support, Mike? Okay. So, my analysis tells me that we're a fib or a 4-hour swing. Here it is here on a 4-hour chart. Okay. Here it is, 4-hour chart. 4-hour last week down. 4-hour this week up. Now let's let my chart catch up a bit. Okay. Now we've fibbed down. Found support at the fib of this rise. Now we're long. If you're a bear and you're thinking lower lows, that's the area that you want it from. It was either one area up here or it's going to be two here at the next 4-hour potential swing. Okay? Your target is going to be down here. Okay? It's about 120 pips away. It could do it if we get a short-term change of trend. Okay? Now, next question is, well, what if you've missed this trade? And you go to bed or whatever, and you wake up for New York, and we've done, let me zoom out here a little second. We've done this. Came up, hello, sort of double topped, down. And you take the pullback here to short it. Are you going to get the same amount of pips out of that trade as you would up in here or here? Would anyone try and short for the same number of pips? Or is your entry, or is your target going to be the same target as these trades? So instead of maybe making 130, we're now looking at 70. It is, isn't it? Your target, your best target here, go back to my 4-hour chart. What happens, guys, is you generally make a new lower low, you pull back somewhat, you make lower lows, you pull back, you might muck around a bit, you make a lower low, it pulls back, lower low, pulls back. So if we could make a lower low, you're going to expect a pullback, right? So whether you entered from that first point, you're entering from about where we are now, somewhere on a little change of trend, or you enter later on in like New York, your target is all the same. There is no, I cannot take a trade and hope for 50 pips, 50 pips, 50 pips, or 100 pips. You need to look at where this, in this case, the context of this, is going to go. I had someone in my class the other day say, the chart was like this. 15-minute chart was like this. Down, had been in this little swing up, and they longed here, where I'm doing green. They took a long right there. And I said, what's your profit target on that thing? And they said, well, I always hope for 50 pips. And I'm like, well, you're never going to get it. You can try that 200 times, and I can almost guarantee you might get it once or twice. And so this big debate broke out. Can anyone tell me why they're probably not going to get their 50 pips? Exactly. They just took a swing long into resistance, into this resistance here. Okay? And the trade did this. About 2 minutes after us talking about it. The trade's actually in a downtrend. The trade did this. Hi. See ya. And it actually just did this. Boom. It just fell through the floor. Move fib, short. Took a long. Now, the discussion I was having with the trader at the time was the best you could hope for here, now that you're in this thing, if you do not want to cut this now, is this. That this will come up, I'll draw it in red, this will come up a higher high to like the 618 and you'll get out of it. Because, dude, this is at least, let me draw this in black, this is at least, because of fractals and Fibonacci's, going to do this before it goes up. It's going to come down, probably fib that rise, something like that, and then do that. So 1, your stop's going to get knocked out. 2, if you think it's going to go up 50 pips, you're going to have to ride a huge storm. So that's another thing to take into account. Okay. So a couple of things to think about. Yeah, I've had a long day too, George. Believe me. How you doing? Okay, so targets for a trending market like this, what I've got up here. Would you guys agree that this makes sense? If you're trending down on a 4-hour chart, say like this, that no matter where you enter in the swings, you know, on these from up here, from here to the downside, the lower you take the trade, so if this is 1, this is 2, this is 3, the later you take the trade, the smaller your profit will be. Okay? I've done a lot of back testing with robots where nearly every time a coconut, every time you get over 300 pips in something, you're going to get 150 to 200 pip pullback. So like if that came down 300 pips, you're going to get that before it does that. So if you're entering here, you're going to get that many pips. If you're entering here, that many, and if you're entering way down here, it's, you know, that's minuscule. This might be a position trade, swing trade. Oh, I'm entering way late in this spot trade. Get out. Okay. So if you were in these trades, you might say, okay, I will hold this to new lower lows and make myself 200 pips. I'm getting in way late. Okay, I'm going to hold this for 100 pips. Get out. I'm getting in way late here. If I get 30, 40 pips out of that, cool. And then I'm expecting the pullback, and then I'll, you know, re-enter up here and continue. Okay, so that's with the trend. If you're against the trend, you got to pretty much, you know, if you're longing like this area, anywhere in here on this chart, in here, you got to change your game plan a little bit, don't you? I guarantee most of you lose your trades, well not lose, but you take most of your break-evens, counter trade the market, like a 4-hour trend. Would I be accurate in that analysis? Yes. So if you're counter trend, so let's say you've got this. Oh, countering's okay, George. You just got to, like, if you've been swinging down, okay, and then suddenly you get this. Okay, now if you believe that we're going to go to this area or this blue box before we come down, so you're hoping for this in black, and then hello, trend continuation. You can always long in a green area like this, okay? But what most of us do, well, I had this big problem as a more novice trader, okay? What most of us do is we take the trade, we're in. Oh, up 20 pips. Break even. Stop. Break even. Great. Great. I'm up 50 pips. Fantastic. I feel good. I'm got this trade out. There's no better feeling than making money. I'm up 50 pips. I'm up 70 pips. Awesome, dude. This is going. This is leaving the station, and I'm honest. I'm having a great trading day here. I'm up 70 pips. It's worked out perfectly. This is going to be a mega trade. Only to watch it slowly, turn around, come down, bang, knock me out, break even. It happens all the time. Which means that, and this goes back to the old trade plan deal, as part of your analysis and trade planning, if you are trade planning to counter trend the market, in most cases, do not be a hero. If you're entering at say a 382 or a fib of the rise, if this was a 382 fib here, say, here, and you think it's going a little longer and you get in your long here, just take it up to the 50 or something. Get out of it. Jam your stop tight, and you might get lucky. But take your 50, 60 pips or whatever, and take that money and run. Like, if you could make 50 pips a day in any market, you'd be happy, right? Counter trend, always take profit at sensible points. The day that I decided to do that was a trading account that suddenly got a bit more of that look to it. Because I'm one of these guys that feels confident enough with my trading and stuff that I can do a little bit of counter trend stuff. But I just get, used to get a little bit trade management paralysis and just be looking at stuff. Just looking at stuff and staring at it thinking, this is going well, and not thinking of the big picture. And watch it come up to resistance of this fall here. Thank you, and I'll take a break even. And then luck would have it that your next trade somewhere will be a loss. So you're up 70 pips at one stage in the day. It turns out being a break even, your next trade's a loss, so you end up like being 20 pips down for the day. And at one stage you're up 70 pips. Psychologically, man, that hurts. That's hard, and that happens a lot, right? All because I didn't trade plan the exit very well. Another scenario. A couple of scenarios for you guys. The same. Let's go the same setup as I was just showing you. We've got a little counter trend. Okay, and we take a long here. What other reason in green would you might use that as your target? Instead of, let's say, there's options as just taking profit because of psych levels or fib levels or whatever. But what other thing could I use to take profit on? Any ideas? Be another one, potentially, Ron. Yes, pivots would be good. Fib extension might work as well, Mike. Good. What else? There's one thing that you'll see all the time. Like, saw it in New York today. Right, time of day. If you long here in Asia, so we've got Tokyo open down here, you set up your trade plan, boom, off we go. And then you get up here, numbers of hours later, and you're getting European and London open up here. They will generally try and change the trend on you. And they'll even work in this sort of deal, where let's say Asia, you shorted here. Or Tokyo, okay? You shorted here and get it down to this area here. London, nearly every time, will try and long that thing, at least back to resistance to continue it. No, 4-hour swings should be good enough, George. Okay, so that's another thing about trade management or targets as well. Okay, and this is probably the one area I'm still trying to work on, because I'll take an entry in Tokyo because I'm coaching quite often and be up 30, 40, 50 pips and leave it thinking off it goes, go do your thing. And it comes down, London longs it, knocks me out and continues. You'll see this quite often, won't you? Let me draw this. Asia, short, comes down, London, long, knock you out, continue. So Tokyo, short, makes that lower low. London, or European market open, long it, knock your break even trade, goodbye, then it rolls over and continues and goes in your direction for the day. Exactly. Especially at the start of a session. So you might get this might be more European markets over here, Moscow and all that sort of deal, and then it comes up to here, London opens and takes it in the same direction. 5 hours ago was Tokyo, 4.5 hours ago was Tokyo open, and it's probably closing pretty shortly, I would say, then. So, taking this scenario, sometimes it's good to think about if this is a nice trade in Tokyo and you go make 50 pips, make your lower low, is there anything wrong with taking your money off the table down here in this area? We're going to make 50 pips, new lower low. Is there anything wrong with that? There's a good chance you're going to get the pullback, right? There's a good chance you're going to get the pullback and be able to get in it again later. Wouldn't you say? I mean, if we just go to a 15-minute chart again. Whoops. It's very rare when you look at how choppy this is. Okay, we might have had one little area in this, 2 weeks zoomed out here. We might have had one little area maybe in here on one day when things didn't pull back and give you opportunities. Otherwise, they're doing this sort of thing a lot, aren't they? Swinging down on a 15-minute chart, little move fib, continuation. Okay, so if you're shorting up here in green, there's nothing wrong with getting out down here in blue and then getting the next short in green later on. So PA, you're long the euro. Right, so where was your entry? So right in here. Right. And where are we now with respect to resistance? Are we in an area of selling right now? Or buying? We're right there, right? This to me is a red area. This to me is, whoa, I could roll over here and come down for the day. Right? Right. No, we're in an area of resistance right now. Okay? So, based on okay, let's put it this way. For this to go up here and make higher highs, could it do it? It could. Who knows? We could go up to visit 134, the psych level, 134.50, and then come down. It's perfectly possible today. Okay? I have no idea. But for it to get up there and do that, PA, is this possible? You know what? Because I'm at resistance, I'm going to find sellers. And they're going to sell, and then at some stage I'll find some buyers, like at a fib of the rise, probably right where PA is entered there, and then I'll go up there. I.e., what is the chance, PA, that your long at 133.19 is going to last and go up and make higher highs? Right. And because you're at resistance, okay, I mean, you could look at a short-term time frame up here and see, am I rolling over? Because if I am, I'll get out of this trade, take my 20-odd pips, and then I'll just refib this rise, and I'll probably get back in a cleaner trade in this buy area, back down here somewhere, where I can now launch, and if things go my way, 134 plus could be a decent target today. Because that's exactly what is going to happen here. You can almost, in most cases, unless something fundamental comes out and says Eurozone is fixed, or Eurozone disaster, this thing's just going to step its way, just like it's been stepping its way around for the last 24 hours. Okay? Up here, 4-hour resistance, 4-hour support. Stepped my way up. Thank you. Stepping my way down. I'm at the next level of support. Now today is going to be, well, are you coming down from here, or are you heading up? That's the sort of juncture we're at right now. If you're long it, if I was long this, I'd be getting out of it here. If I had long this euro, I'd be taking my money and running. Does everyone see that? that if you'd longed, especially because PA sort of, in my little trading world, got in a little late. Down here, getting in here is a little late. You more want to be trying, down here at the psych level or something, if you think it's going to go up and last, because this is going to do something like that to head up. If you've entered down here, you've got more chance of survival. How often do you guys see this? I bet you see this a lot. Here's my fib. Here's my long. Look at that, I'm going to take it right here at the 50% fib. And what happens is, in pink, is instead of getting long, it continues. Uh-oh. You got to stop down here. Stop loss, okay? Don't panic. You got to stop loss. Comes down to here, and then gets long. And then it pulls back to form the next swing. Oh, by the way, once you get up here, once this is a 15-minute swing. So once we break this 15-minute swing, you're moving your stop loss to break even. 15 pips or 20 pips in profit or whatever. Thank you very much. Then what happens is it pulls back, knocks you out break even, and then continues. How often does that happen to you guys? Quite often, right? So, is there a way around it? What about this? I'll draw in blue. Okay, I've entered at the 50% fib. It's gone against me. I'm now up 20 pips. But because of my poor entry here in the blue box, I am now at the you're going to take a break-even trade here area. So why don't you just, once you've maybe broken this swing high up here, why don't you just cut that trade and take your 20 pips off the table and then just line up the fresh new swing and use that risk you've just taken off the table, that 20 pips, as your new stop loss. But at least you've got hopefully get a clean entry on the next swing, so that when this thing continues, you're not going to get the same problem as before. Make sense? That's another thing that's helped me a lot, because I would get in these situations, especially like in New York or any time like London, when things start, bit of momentum starts picking up in the markets and things. I will get into a nice trade. The entry's not clean. You might find yourself down 10 pips. It turns itself around. You're up 20. You jam your stop, break even. Then it comes down, knocks you out, break even, and continues. Every time I do that now, guys, I'll just cut that trade and take my money. And then I'll just get the next swing if I still believe it's got some momentum. And then off I go. Helped me an awful lot. Well, no, I don't even bother, George, usually even moving the stop to break even, because I just kill the trade. I just kill it. And take the whole, the stop loss hasn't had time to go to break even because it comes up, you're up 20 pips. Take that money because I haven't got a very good clean entry. So the management technique is just to kill that trade and then wait for the next swing and continue. Okay? Just finding a another thing, guys, we'll wrap up with this, okay? Is the fractal, understanding the fractal nature of the market can really help you there we go. Understanding price action and Fibonacci, not so much Fibonacci, but the fractal nature of the market can really help you in determining good entries in your trade management. Okay? You guys understand swing fibs and move fibs and everything, right? Swing fibs, move fibs, all that sort of stuff. Now, right, we'll focus not on the yellow, but the green and the pink. Okay? What I've drawn here is typically what a trending market would look like. Okay? Maybe the yellow is a daily chart. The pink is 4 hour. And the green is 15 minutes, say. Okay? So, we're swinging up, and we've got ourselves some 4 hour swings. Okay? So, when you're longing in any time frame, let's say you're into 15-minute swings. Anyone into 15-minute swings? The more they swing, the more something swings like this, the more you've got to expect that move fib pullback before continuation, right? It's like because of the sort of other time frames and things have to catch up. You understand that? Like if that was a 15-minute swinging up there, you sort of got to get that pullback to let the hourly or the 4 hour catch up before it continues. Yeah? Makes sense? So, that being said, the later you take a 15-minute swing, the more chance you're going to get that move fib pullback, aren't you? So, while you might take swing number 1 here, on maybe the fresh change of trend, you've got more luck of outlasting all these swings and really getting yourself a nice trade. But let's say you take trade number 2 at this swing, you've got a good shot you've got a chance that you're going to get the move fib put on you. There's your entry there. The move fib's going to knock you out, and then it's going to continue. So something to think about in terms of trade management, guys, exiting trades, is if you're taking, say, a 15-minute swing and it's been going, you can still take the trade because that's the direction, right? But don't be afraid to get in the trade and say, 25 pips, new high, getting out. And then waiting for the move fib. So you could say, okay, I'm going to swing, and then wait for the move fib. So you might take trade number 2 here, get out, then give me the move fib, and then take this new swing in here. Fresh swing, first swing. Oh, I don't know, Rain, it can vary to 1 to infinity, but if you go and study 15-minute charts, they go off, they come back. It varies, right? So, some Elliott wave boffins might be able to tell you. So then you can get, yeah. So you can then get in the next fresh swing of the new move, okay, and have more luck of surviving. But then if you get in this trade up here, and you try to just continue it, you're going to get knocked out by the move, and then it continues, okay? You guys see this all the time. So something to think about, just to wrap up, guys, is when you are swing fibbing, when you're swing fibbing something, swing, 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 at some stage, doesn't matter what time frame that is, even if that was like a 4-hour chart, okay? Even if that was a 4-hour chart, at some stage, that's got to change trend, and the daily's going to catch up if it's going to continue. And so if you're long anywhere here, you need to think about that. And I think it's most prevalent in the because most of us trade off like 15-minute swings and stuff, don't we? Even shorter. If this is 15-minute swings, oh, this is good little trend. Yeah, it's good. It's inevitable that at some stage, price is 4 hours going to catch up. You're going to get that pullback, and you need to continue. So your 15-minute chart's going to go down, even a little downtrend for a while, and then truck back up. So if you're longing in any of these green zones, might not be a bad idea sometimes to just get in and get out, get in, get out, get in, get out, wait for the move, get in, get out, get in, get out. Okay, something to think about. I think I've run 5 minutes over time, and I've only really spoken about half of what I wanted to talk about. So we might follow up with a later session on this down the road. Anyway, guys, have a good rest of your day, and we'll catch you tomorrow. Not tomorrow, sorry, next week. Cheers.